And we are live. Welcome, everyone. I'm Danielle Patterson, CEO of Family Office Access, formerly known as Family Office List. And today's Lunch and Learn is one I've personally been looking forward to, as we'll be exploring how family offices are aligning their capital with their values, from philanthropy, impact investing, to the next generation engagement and legacy planning. And I'm encouraged by the shift that we're seeing in how families think about giving. It's no longer just an obligation, but rather a way to live out their purpose, involve the next generation, and build something lasting. But along with that always comes questions like, where do I start? What structure makes the most sense? And how do I know if I'm really making an impact? So to help us unpack this, I'm joined by two powerhouse women who work at the intersection of giving, investing, and advising family offices. I am pleased to introduce today's two guest speakers. First, we have Maggie Spicer, a serial entrepreneur and advisor whose work spans brand experiences, philanthropic venture placement, and value-aligned projects for family offices across the US and Europe. Hi, Maggie. And she's joined by Bella Berns, a seasoned executive and board director who advises individuals from family offices through her work at LCV Advisors, supporting impact investing, strategic philanthropy, and legacy planning. Welcome, ladies. I'm so grateful to have you here. So I'd love to start and just get to know you both a bit better. So for the audience who hasn't had the opportunity to really admire your work, we can get acquainted. So Maggie, I'd love to start with you. Can you share a bit about what's lighting you up in your work right now and what really originally drew you into the space?
Sure. So I am a serial entrepreneur and love working with small food producers internationally, and was drawn to philanthropic venture advising and investing about 5 years ago, and got into donor advised funds and went really deep on the topic of how you can work with tax advantage capital to invest in for-profit businesses that are having a net positive impact on the communities they serve, and launched a fund which supports independent restaurants and regenerative ag. And fast forward and started advising family offices and high net worth individuals on how they can also work with their tax advantage capital in this capacity.
Amazing. I think this donor advised fund was a relatively new term for me, and I've seen you present on it and just excited to share your knowledge with everyone today. So thank you. And our second speaker, Bella, welcome. I'd love it if you could walk us through the type of work you're doing today with family offices and what makes it meaningful for you.
So I'm most excited to be working with, I don't know if there's a delay. I think there might be a delay, Danielle, sorry. I hope I'm
Oh,
not.
you're good. You're good. I can hear you perfectly.
I'm pretty excited to be working across the spectrum of assets with family offices and individuals, sometimes companies, but working from venture capital, private equity, owner-operator businesses to actual philanthropic donations and strategy. So it's exciting to sort of have different parts of my career across all of those. I've been in-house at a charity, so I've got sort of that weird generalist perspective, but really fortunate to work with people on small projects that are, relatively small, $1 million on sort of rural regeneration, to very, very large, over $1 billion funding consortiums. So it's been a privilege to work with some very clever, very thoughtful, often very humble people.
Wow. Amazing. I mean, just the spectrum and seeing it from the inside out from both sides of the coin. That's really a unique expertise you bring to the conversation today. So thank you guys. And I guess for the audience who's just not as informed with the topics we'll be discussing, I'd love to just kind of take a high level approach and get a foundation for our conversation. So really understand what's fueling this momentum around values aligned investing and philanthropy. And this can be a question that's really open to either of you, but why do you feel that more families and those looking to partner with them are prioritizing alignment between capital and values?
I'll kick off. I think part of it is there's a real desire to have an impact where your capital is being placed and directed. And in the context of a family office, there's a lot of freedom to do that. And especially now with different vehicles such as DAFs, charitable LLCs, et cetera, there are, and SVPs as well, there are many avenues to have immediate and full control over where that capital is going and how the capital is being deployed and then further utilized beyond that. And I think this is one of the first times in quite a while that we've seen such mainstream adoption of these tools to have a net positive impact in the niches that each family wishes to serve.
So encouraging. It's exciting. Before I move on, Bella, anything to add? Are you seeing a shift in the conversations you're having with the businesses and the families you're serving?
Yeah, I think the biggest shift is not necessarily in terms of intent or interest to align across the investing spectrum, but the availability of
Mm,
different options. So, again, they can invest in everything from an established fund that is returning amazingly, if not better, than conventional options, but also in small startups to more entrepreneurial pursuits. So I think that there is much more availability and creativity, sort of creative options. And like Maggie said, family offices are able to navigate that often because of how they generated the wealth.
yeah. And, there's no one size fits all in the world of family offices. So I like now that there's all these different vehicles to address those different desires, different needs. And let's break that down a bit because, again, I'm rather new to the whole DAF concept. And so when I was like, DAF, what is this acronym? And Charitable LLC. And, I obviously I'm very passionate about impact investing, but these terms may be newer to some of our audience and there may be more that you guys can kind of discuss and unpack. But breaking down the basics of these things, Maggie, I know you are very passionate about DAFs. Can you really define maybe what a DAF, a donor advised fund, and maybe how that differs as well from a private foundation?
Sure. So a donor advised fund, like it sounds, is a fund fundamentally at the base, and it's typically 501c3 backed or sponsored, and it's really quick to open. It's easy. It's low barrier to entry. There isn't a lot of legal compliance or structure. Like you're not setting up an LLC, for example, which is what you would need to do with the charitable LLC. And then there is a financial custodian on the back end who ultimately does make the final deployment of the capital that gets invested into either a nonprofit or a for-profit. So in that regard, the donor doesn't have full say over where a grant might ultimately land. If they want more control, then a charitable LLC is a better fit, or even a foundation. But essentially, and you think of it like having almost like a savings account. And you'd open the savings account, you'd fund it, you get an immediate tax deduction when you put the capital in the fund. And then from there, you can work with an advisor to help determine where that capital gets deployed, whether it's one vertical or 10 verticals, whether it's domestic, international. You can also structure grants to make them recoverable or non-recoverable, depending on your incentives with the fund. If you want to bring the money, ultimately the returns from the investments that you make back into the fund to redeploy it into future startups and or nonprofits, or if you want to make it a non-recoverable grant, then don't anticipate seeing that return. So it really depends on how the donor wants to use that DAF. And again, that's why thinking like a savings account is one of the best ways to break it down into very basic terms. And then with the charitable LLC, it is ultimately backed as an LLC, so there is more paperwork and a little bit more tax compliance that's required, additional costs as well to set that up. So you're usually working with a lawyer when you file paperwork. And then a foundation, of course, is going to have considerably more infrastructure that's required to get that launched and off the ground. So DAFs are one reason that, or for these reasons, DAFs are a really great vehicle for someone who wants to have more transparency and also speed in making the grants that they have interest in, or if they want to do, for example, their angel investing with their tax advantage capital. It's a little bit more lightweight methodology to start working with tax advantage capital for someone new to this realm.
Wow. It's incredible. There's just so many benefits. Are there any downsides? I'm curious, are there requirements, in the timeline you have to invest this money? I'm curious to learn more.
Yeah, so it's actually pretty fast. You can open a DAF in about a week and sometimes faster, and then deploy that capital within a few days after that. So in that regard, it is quite rapid, and it doesn't require a lot of public transparency, unlike a foundation, for example. So it is one of the fastest ways to execute this type of investment vehicle.
Wow. I might kick things over to you, Bella. I know you deal in all the different vehicles, but just to follow up on the DAFs before we move on to the others, which you can help us understand. I think I recently read that there's like 230 billion that are sitting in DAFs undeployed. And so,
Yeah.
I love the flexibility, but I guess I like, Bella, you brought up, that you need advisors often to help you in deploying that. And yeah, I see that, the work that you do you help come up with strategies for people to take that and help get it out into the world in a meaningful way?
Yeah, so a couple of things on that. DAFs, I absolutely love as well. They're so easy, they're quick, and often for someone who has a liquidity event or a high income year, they're super valuable because you get the tax credit immediately, and then you have time. So if you're building businesses, if you know, very, very busy lives, a lot of times you can park money in a DAF,
Mhm.
with the intent to learn and give away in time, which
Yeah.
is also the complaint
Yeah,
against
yeah.
there is
Both sides of
quite
the
a lot of
coin.
assets under management. And the common complaint with both organizations, on the receiving end, and individuals who don't want tax dodging, et cetera, is that there's too many assets sitting unused. Um, Oftentimes, there's a logistical reason for that because someone's building a business and/or they want to do it very thoughtfully, so they aren't spending straight away. Um, and then, sort of my biggest complaint on DAFs, and Maggie, I think you have a lot more from a creative perspective on funding. A lot of the national DAFs or international DAFs have very strict requirements,
Mhm.
or parameters on the investing side. So, again, with sort of the general public's complaints of assets under management that are going unused, you also have, decently high fees, both for administrative and investment fees. And then
Mhm.
sometimes with some of the community foundations or national DAFs, they're what they're investing those assets in can be quite small. And so
Mhm.
it's fun to see how some of that is evolving and how different types of investments are getting on the approved list.
Yes.
Um, but a lot of them are very traditional.
Okay.
Sort of, so that's my biggest complaint about DAS, where I like to see, if you move into the charitable LLCs or a public benefit company or any of the number of other vehicles that you can utilize, a family or multifamilies have more flexibility with that whole spectrum of investment.
Yeah. Fascinating. And I love the fact that it gives that breathing room for someone to learn and to take that time. I am curious. I love, Maggie, you have the international and the US, experience. Do you see a big difference in terms of some of those regulations in the clients you're working with and the structure?
Well, DAFs are typically based in the States, and so oftentimes if there is an international investor working with DAFs, it means that they have that capital housed in US dollars in the US. So it's not as commonly seen in places like Europe, although DAFs are included in foundations and family offices, like they have access to the DAFs, but because it's a US instrument, it's a little bit different in terms of how they're utilized and accessed. So I'd say you'd see a lot more volume and activity happening domestically. And as Bella pointed out, there's considerable money sitting in DAFs, and it is one of the reasons that they get a bit of a bad rap as far as headlines, because when they were invented in the 1930s, it was intended to be this vehicle to deploy capital quickly after a liquidity event or significant moment in one's life where they came into significant wealth in one tax year. And what's happened is a lot of individuals or family offices, either way you look at it, open the DAF, put the money into the DAF, and take the tax benefit in that immediate tax year. Or if the amount that they invest in the DAF is higher than they're able to take for that tax year, then it gets carried over to subsequent tax years. But the money gets parked there and isn't deployed, because typically financial advisors are incentivized with assets under management. And so it's not always in their best interest to advise their donors of where to actually deploy that capital. And so you see huge sums of capital sitting in the DAFs. And that's why there have been other movements such as Half My DAF and other campaigns to get that capital flowing out into the communities and out into the world, and not just sitting there accruing interest. And I just wanted to point out, I saw there was a comment here on the right about the reference to savings account. Yes, I want to clarify, DAFs are not savings accounts, and they are not intended to be savings accounts. But in terms of the sort of most basic way of thinking about it, it's a fund that you then can use in creative ways. Of course, it has to be followed along the custodial chain, and typically those funds, when they get deployed into for-profit entities, have to be in support of one of the 17 SDGs, Sustainable Development Goals. So it's not, in that regard, a free-flowing savings account that can be invested however someone wishes. Just wanted to point that out. But yeah, just to come back to your initial question, Danielle, the majority of the activity that I'm seeing is still domestically, but there are ways that international investors can activate a DAF.
Okay, super helpful. And I do like the way you touched on earlier. Well, first of all, Half My DAF, I'm going to have to look that up. It sounds amazing. Great initiative, and neat to see more awareness. I've seen a lot of comments come across. I wish I knew about this. And I think, making the resource available. So I will definitely check that out after. But you brought up earlier, and I'd love to learn more, just different unique ways where maybe you can structure the investment as a fund and then reinvest it back into the DAF. Either one of you, feel free to. I'd love to just, I'm a curious person. I'm sure our audience is as well.
Bella, would you like to take that, or?
Yeah, and I'm going to sort of touch on a question that you asked earlier that I didn't answer. Apologies, Danielle.
No, I'm all over.
A lot of the DAFs, the community foundations, the sort of national, whether it's Schwab, Fidelity, et cetera, internationally, UBS has been doing this for years. A lot of those organizations and corporates have advisors. So they are, as Maggie touched on, sometimes there's conflicting initiatives, but the advisors are fantastic in terms of helping really understand what the client would like to give and how they'd like to give, but also connecting. So there's one part teaching happening if it's a new philanthropist or it's someone whose assets have increased and they want to get more involved. So the DAFs are a really good learning tool with the team. So the team is providing due diligence on organizations to a certain extent, not, sometimes as much as should be happening, but great due diligence, great teaching and connectivity to other donors or philanthropists that are giving in these areas. So I love when people are new to philanthropy or new to impact investing, those introductions. I think that is some of the most valuable, the peer-to-peer introductions that are happening, especially when I see sort of a smaller community foundation, whether that's focused regionally and you want to give locally and try to help regenerate a community or keep it strong, or invest, where you live, or where you grew up in some cases. But then also, on a sector changing specific initiative. So whether that's climate change, education, human rights, of really saying, let's look at this in a collaborative funding way. And that what's happening in the last sort of 5 years on collaborative funding across public-private partnerships is mind-blowing. Where people are really taking a backseat and they're very humble, very patient capital, and really willing to work with others that they may have ideological differences with, geographic differences, but really saying, okay, and they still have some control of what they're giving and which area of change they'd like to impact, but how they all work together. That is I think, one of the neatest things right now, where you have an in-house advisor who's not necessarily specific to your family, but those connections are really important for the sector.
It's so encouraging to see. And from the perspective of, the family office specifically, I see so many of them raising their profiles so that they can attract like-minded families. And I'm a huge believer, maybe it's like how us women operate, but we can be so much stronger together. And when you find these groups, these vehicles, it just allows us to collaborate. And I even see within family offices, the hardest challenge many of them face is that generational wealth transfer. But when you find your why, what you're passionate about, you can involve every generation in that conversation, in that act of giving. And I do see that just being just a way to carry on the legacy. Yeah. So I guess moving from DAFs, I could just spend this entire lunch and learn talking about it. But I guess let's talk about some of the other vehicles. And it is interesting to think the amount of control, kind of the intent. The structure probably ties back to who that initial person is and what their goals. Do they want to be hands-on? Are they entrepreneurial? Are they looking to play an active role, or is it more, so put this out there to either one of you. I mean, things when you're thinking about impact investing versus a charitable LLC, do you see what are the different reasons you would go for one over the other? And do you see, it's hard to generalize at all, but maybe like the younger or the more entrepreneurial families going for one over the other?
I think the two biggest determinants between DAFs into charitable LLCs or foundations
Mm-hmm.
is time,
Mm-hmm.
and how much time the individual or the family has to devote.
Mm-hmm.
And that includes management of teams. So similar to being a part of a multifamily office or having your own family office, becomes a whole nother company.
Yeah, absolutely.
There's a human factor of that, which I think, so with DAFs, obviously that's not a concern. When you're looking to start up a foundation or a charitable LLC or a public benefit company, it's a new business and a new company, and that comes with management. So time is often a really big determinant. And then on the capital side, what size are the assets that the individual or family wants to give away?
Yeah.
So DAFs obviously hugely flexible. They can start really, really small, but they can grow massive as well. And a lot of people really like the simplicity and the lack of management needed.
Mm-hmm.
But I typically start to have conversations around giving 5 to 10 million away, of just checking in where the family is and in terms of need of privacy,
Yeah.
the fees that they're paying on the assets.
Mm-hmm.
And then again, this sort of comes full circle to a lot of, I think, what Maggie's focused on is that flexibility of, you want to be investing in some startups and helping, encourage that landscape. And then at the same time, you have risk capital that you can use in a philanthropic way. So the charitable LLCs, foundations to a certain extent, there is obviously an annual donation requirement in the US. But the structures become a tool for how the family wants to give. And so, a lot of times, if you have someone who's made their money in finance or tech, they want the flexibility to be able to create impact through a variety of tools. And they want to be able to do it.
Yeah. I attended a conference in Miami this past weekend, and one of the panels was 3 different very just committed family offices that have started their own foundations around anti-human trafficking. And it was interesting to hear they were all exited founders, very large companies. And when they were faced with that challenge of, okay, well, where should we give philanthropically, coming from that business acumen, it was like, there wasn't enough transparency. I wasn't seeing the solution, so I built it. And so it is neat to see that it is a business. And it takes a lot. And so seeing these leaders now channel it into a new vehicle, it was really inspiring.
I would add that in addition to what Bella shared, that a couple of benefits of opting for a foundation or a charitable LLC as opposed to a DAF is that you have you have actually considerably more ability to build a brand and build a legacy, because you're naming, you have more or less full control over the grants that are made, and you have a public facing name in a lot of cases, or if it's an LLC, you can choose how you want to structure the naming of it. But if you really care about having a brand or a name behind how you're making your charitable investments, or building that sense of legacy, a lot of family offices want to focus on one or two core values that they have, and then in many cases there isn't an organization that is actually satisfying those values at the most distilled down level, and they have a unique opportunity as a foundation to actually continue down the line as the foundation, creating that entity, whether that entity ends up becoming for-profit or non-profit, or creating an LLC on the back end that actually functions in the world as a business. And so it gives a lot more flexibility to have that legacy, essentially. With a DAF, you are relatively anonymous, and often you're more so doing it for the tax benefits, still having net good in the community and in the world if you're deploying the capital, but it's really more of it's less about legacy.
Yeah. And that conference, again, the three panelists, they're examples of creating these foundations. It was interesting to hear they'd all started in each instance with something they were doing personally, and more people wanted in on, like, how can I help? Can I write a check? And they said it got to the point where I felt selfish because I was doing exciting things and people wanted to contribute. And so I needed to, I loved the term. It was like, invite them in to be a part of the blessing. And I just thought, what an amazing collaboration and vehicle. So I'd love to shift. It is philanthropic, but it's a different lens, but impact investing, the world of impact investing, which, we hear the term and it might be harder to even define. It probably means something different to each person, what they're passionate about. But I'm very encouraged to see, again, a way in terms of family offices, it really helps the families solidify their why, what they're passionate about, bring that next gen into the fold. And I think, I'm always looking at the industry reports. UBS reported something like 95% of millennials believe in social and environmental outcomes, in addition or above, beyond just financial returns. And so when you're thinking about the families and working together and finding, ways where they can meet in the middle ground, I do feel like the impact investing is becoming a great option for these families, and they can have that completely separate from any of their philanthropic vehicles. But how are you seeing families think about the philanthropy, but through a lens where they're also getting that financial and social return?
We're just
sorry,
we're reading text messages right now. We on the impact investing, I know everybody, and some of this is, without simplifying it too much, sort of the entry level impact investing is often index funds with positive and negative screens. And again, anyone who's in finance knows what that means. Anyone who's just embarking on this journey as an individual or a family, it's where you are, from a technical perspective, screening out organizations that are causing harm. And that can be defined in many ways, but there's a very strict screening, both positive and negative, for public entities. I work with clients who are owner operators who their definition of impact investing is creating a really strong work culture where the employees are well looked after in terms of competitive salaries and, over and above strong benefits. And then all the way to, and that, by the way, is time consuming and expensive. So that is impact investing in definition. And then there are, individuals who are looking at it at a much more restrictive, saying, I will only invest in, I long ago invested in a company that was doing very personalized algorithmic trading and investing. So if Maggie or Danielle, you came to me and said, I am super passionate about ocean health.
Yeah.
I want my portfolio completely tailored around ocean health. They could dial that in. And it's incredible. They're working with, some sell side accounts and multifamily offices right now, and they're doing exactly that. So if you want to tailor your portfolio for human rights, you can do that. If you want an environmental screen, you do that. And so it's gotten very personalized. And that's really exciting for a relationship manager on the sell side or at a multifamily office to say, like, great, you're passionate about education. We can absolutely tailor your public and private portfolio towards that in multitude of ways. So I think impact investing can be both quantitative and qualitative in a wonderful way across the whole spectrum. So, and I'm going to stop talking because I want to hear more about Maggie, because I think she's doing really fun entrepreneurial impact investing.
Yeah.
And I think that's the hardest to access right now, because it's not available to everybody. And, you really got to be in these networks and connected to see that deal flow. So that's, I think, one of the more exciting spots.
Yeah, I would love to hear from Maggie, because I know you do work with a lot of exciting entrepreneurs and a lot of different projects. And from my own perspective too, impact may mean different things to different people, but measuring that return, I'm sure, can be a challenge. And maybe it's the impact of the return is unique to each individual investor. But yeah, I'd love to hear your thoughts, Maggie, in terms of some of these exciting entrepreneurs you're working with who are making a real impact.
Sure. So I think it really is, impact is defined really at the core of the individual or family and how they want to literally have an impact with their capital. Again, whether it's charitable capital or risk capital, it's ultimately in their hands where that capital flows and hopefully what the ROI is from that investment. I typically focus on the for-profit side because oftentimes, if anyone here who's been a small business owner, especially if you make a product or have a brick and mortar, you know how challenging it is to keep the doors open, keep product in supply, especially with, recent tariffs, et cetera. And there are constant demands. There are certain markets that are harder to operate than others. San Francisco is one in particular that can be really challenging for small business owners. Costs, the way the city functions at times, it can be unrelenting. And so oftentimes a founder creates a company because they're really passionate about whatever the product or service is that they're offering or bringing to market. And a lot of times they're doing it, for the first time, and that takes a little bit of a leap of faith and, luck at times too, depending on the timing, getting the market correct and the go-to-market strategy and all of that. And so what I love about using tax advantage capital in the for-profit space is it gives a little bit of an extra boost to that individual or that entity, particularly if they're still in the 0 to 1 phase, or if let's say they've gone through an initial round of fundraising and they've been around for maybe 10 years and then they're still bringing a really incredible product to market, but they need that additional boost. And often they don't have a background in finance, or they don't necessarily have a whole list of folks they can reach out to, or they don't know how to access these impact groups and private deal flow groups. And so if you are someone who's in the ability to deploy capital, there's so many ways I can answer this. You're seeing which deals kind of pass through your inbox or pass through your private groups, but you might happen to know a neighbor or a colleague or a friend, or maybe you have a product that you love at your local grocery store, but you don't know what's happening behind the scenes of that product. And oftentimes, especially since the pandemic launched, so many small businesses are on the brink of closure, but you don't know that as a consumer, typically. And I'm going down rabbit holes here, but
no, it's
but I'll use a more concrete example. So there's a case study I love to share is a granola maker who has incredible integrity with her product, and it's all certified gluten-free oats and organic ingredients. There's no sugar or fillers or chemicals or flavorings or like fake fruit. There's no colorings. It's literally like, imagine if you went to your local independent grocery store and bought everything yourself.
Wow.
Small producers.
You get the name.
coconut, oats, whatever, cinnamon, et cetera, fair trade certified and beyond, and made this product. And for example, she was looking to do a next round of fundraising to get to national distribution, but again, doesn't necessarily know who to ask for that. So typically she might go to the SBA or try to get a loan from her bank. And as is sometimes the case, those loans are available, but they're at really high rates, or in other cases that capital is not available for a variety of reasons. And so with an investment from Charitable LLC, a foundation, or a DAF, she can basically structure a portion or even all of her raise. Let's keep it simple math, like $1 million, to achieve that funding goal, and oftentimes do so at a much more attractive rate, and sometimes no rate. So again, I'll break it down even further. Let's say she's taking in a grant from a recoverable grant, in this case from a donor advised fund. If the donor is really passionate about her company and the all of the small food producers that she in turn is supporting in the local community, because she's continuing to produce her product with integrity, then she can take in that capital, and let's say the donor wants to give her half of that raise at $500,000, and they want maybe 1% as a return. Not every donor is going to want such a low amount, but let's say they want 1% over 5 years. For them, it's a win when she's successful with that additional round of fundraising, because in 5 years, they're going to get that 1% back on their investment, and then they can choose to redeploy it with another small business owner who's making, again, a product or offering a brick and mortar experience. And that founder in that instance is then able to have that capital at a much more advantageous rate, which then means that she has more money, by not paying. Let's say the delta is 8% and 1%, then she has that additional 7% that she can deploy to either having bigger goals or buying like future contracts on oats, that especially nowadays is very, very key given the instability with tariffs. Like if she's not sourcing those oats domestically, with that extra 7%, she can do a lot more. So that's a really specific example.
I love that example, and the ripple effect on the whole ecosystem.
Well, and to really impact your local community. And if anything, supporting our immediate local communities right now is paramount.
It is. I agree. Thank you for that example. And I'm going to need to get the name of the oats. So George, thank you. And I apologize. I did not have the chat open, and I've got it. And thank you, George, for your question. What metrics are you looking for when impact investing, and how do you track that? Yeah, that's what I imagine is kind of a challenge, and it may be personal, but do either of you have some ideas on tracking the metrics behind those impact investments?
So there's publicly available metrics and models that are applied and available open source in terms of public entities or investments. And then there's proprietary models that you can overlay. Danielle, I hope I'm not talking over you. I know there's a little bit of a delay right now.
No, you're good.
So again, there's most asset management houses, larger banks, and multifamily offices have the software available to put those layers over. So again, very, very robust ecosystem there. It becomes a little bit more client specific and proprietary when you're talking about small business investments, venture capital, private equity, a couple of other things. And again, there's sort of publicly available software. There's software for sale, obviously. And then a lot of times built individually based on personal and professional preferences.
Yeah, you design your own KPIs for the impact you want to see. Yeah. And I like, what Maggie spoke about earlier is maybe it is a hyper local, supporting where you live in your community. Great question. Thank you, George. What sorts of pitfalls? Any case studies, any examples of things that have gone awry and things that people should look out for in terms of, setting up their structure? And I mean, I'm sure lack of due diligence or just a lack of proper timing, but anything there that you've seen or any examples?
I would say on the DAF side, just to make sure that they get to know their advisor who's overseeing their DAF, and as well as the sponsoring entity on the back end. And also if they're going to invest and co-invest with other DAF holders, to really do the due diligence to get to know them and really do some values mapping to discern if their core values really are aligned, because often it can seem that way at surface level. Especially at the pace of life these days and information, but really taking that time to slow down and dig in to those details.
Are there any organizations, resources, conferences that either of you are passionate about that you would recommend to the audience who wants to learn more?
I definitely would recommend Simple out of Copenhagen for family offices. Fantastic resource.
Yes.
There's also Swiss Philanthropy in Switzerland, Zurich. And then if you're in the Bay, Marin Community Foundation is fantastic, as well as Impact Assets up northwest Seattle.
Any that you really rely on, Bella? Anything else to add to that?
I've obviously worked across Credit Suisse, which is now UBS. So from a more institutional perspective, and actually a venture capitalist that I talked to this week was like, some of my best inflows are coming out of Europe, and because it is just a absolute standard part of their portfolio. So I was really excited to hear that was happening. So institutional things, I think UBS, JP Morgan, are doing a really good job on the advisory side and being really creative in terms of financing and funding. I really love small community foundations for the regional impact and the local impact.
Yeah.
And I won't go too small because, again, it probably does not apply to this audience, although I am going to say for the Salt Lake City folks,
yes,
get in touch with me, because I have a really amazing family that would like to be a part of your conversations. Very entrepreneurial, very value-based. Go Salt Lake City. It's such a great place. And then a group that I used to advise with, if individuals are getting up to speed, multi-generations especially, was called the Institute of Philanthropy. It's changed names and branding a couple times, but I believe it's called Forward Global right now. And I don't work with them per se, because usually philanthropists come to me a little bit after the learning phase. But sometimes if the next generation is about to inherit a family office or become the driver or a foundation, my advice is often learn from your peers, go and with your peers, but also, ranging from teenagers to 40-year-olds who are inheriting things, volunteer or go work for an organization or go work for a social impact company, because that lens is incredible. I think giving circles are wonderful in terms of learning that, but I think nothing replaces actually being a social entrepreneur. Nothing replaces being a volunteer at an organization that may someday receive goods. And I think you touched on it earlier with the next generation of really embracing that their why and what is unique. And that's going to add to your portfolio. It's going to add to your family office. It's going to add to your funding on the philanthropic side. But that next gen is looking at things and seeing things and doing things so much more quickly. And so like bringing that multi-generational work or task force together can obviously be volatile and frustrating.
And there's advisors for that too.
Yes, and I think often a really good facilitator is worth their weight in gold.
Yes.
But those multitude of diverse opinions and timelines are absolutely magic. So that's, I think that a lot of people stumble on, wanting it to be a family initiative, and it ebbs and flows. Sometimes it, they have time to do it. Sometimes they have interest, and other times they're like, this isn't my thing. Doesn't mean they won't come around to it. But there's so many great organizations out there working in this space.
That's awesome. And I do like looking at the family as individuals as well. It can really help a family as a whole solidify their why. But I mean, you look at the Pritzker family and all the different family offices that they have branched off and the different ways that each of them give and focus on their core values. Mahir, thank you for joining us and thank you for dropping your question here. Um, how do you see the integration of strategic giving and impact investing evolving within the single family offices, especially when the next generation starts driving purpose-driven strategies? And so you kind of, maybe you saw the question.
Well, I just read it at the same time, and it's such a great question. And I often say slowly with experimentation.
Yeah.
And a lot of times I don't want to say older generation, previous generation, or the principal, they come to it slowly, but they need to see the returns. If you're talking on the for-profit side and deploying more assets over to the impact investing, they want to see the returns. They want to see, their capital growing. And again, there's a multitude of reasons why that is. But once individuals and families see the financial return and trust in the vehicles, then the shift of portfolio makeup is much easier.
Yeah. Yeah. It's like the proof will be in those metrics. And speaking of metrics, I do love the latest reports. It's a great way to keep up. And so Cerulli, it used to be that the big generational wealth transfer was estimated at 84 trillion. Well, now Cerulli's latest report anticipates, 100 trillion are expected to move hands by 2048. But what I love about that number, 18 trillion is expected to go to charity, and millennials alone are set to inherit 46 trillion. So we really have to think about how this rising generation is not just inheriting that wealth, but they're inheriting the responsibility of how to use it for good. And so, more education, more hands-on, and allowing them to really find their own unique why. And Camden Wealth, another great resource, they found that 70% of the next gen family members are involved in investment decisions today. And that's up from 31% a decade ago. So we'd see, the families collaborating, involving the next gen. And it is encouraging to see, that they're finding their voices, they're carrying that access to information and resources is helping drive that. And I appreciate you both sharing the resources where people can go to learn more, when they have these passions and want to be involved. And I'm sure you both have, but do you ever see the dynamics of the generations really creating friction within the families you work with? Yeah.
All the time. And it's different in every family with every new individual. That's the magic of families.
Yeah. We did a master class with Richard Wolkowitz a few weeks ago, and he's just like the guru of helping conflict resolution and helping that communication and kind of being able to see from each perspective and put a structure around it. And I think what I really loved about that talk, he says, he encourages each person to sit in each role. So they really have that compassion, that understanding. They see the big picture and not just live in their own bubble of, well, here's how I want to do it. So he's a great advisor.
I think of Wendy Waxell, of course, in that regard.
Yes. Oh, amazing with her EQ of wealth and how she's helping that next gen really think about their money and the impact they can have. And I love too the way she creates community and education opportunities. Thank you for mentioning her. She's amazing. Another powerhouse, just like you two. Well, I'd love to hear just more on a personal level. Well, we'll get to my question next. Summer, any advice on how to find like-minded organizations or projects to support or collaborate with? For example, addiction, codependency, mental health awareness. Yeah. I'll say for the mental health, sorry, Maggie, I'm very passionate about Sean Lesser's The Real Mental Health Foundation. And it initially stemmed from his own mental health breakdown and really wanting to help men and create a safe space for discussion around that. But it's really grown. He has an amazing summit coming up in London in June. And it's just great to see the stigma breaking down and people being able to come together and talk about these things that like have felt so taboo for years. So definitely recommend on the mental health front, the Real Mental Health Foundation. But sorry to interject.
I would add also on that topic, Masawa, Masawa, Joshua and Sabine started a fund in the mental health realm. I think they're doing really incredible work. They're based in Europe. And then to answer that question more, well, specifically and generally at the same time, I would say, if you're really passionate about mental health or, whatever it is, mental health, ocean health, regen, ag, et cetera, you're probably already following people in your various realms, whether it's LinkedIn or newsletters or social media, Instagram, et cetera. And oftentimes reaching out to those brands and or figures who speak to you most in those channels and approaching them and saying, how are you approaching getting this communication or this type of information out to the different audiences? And of course, I mean, the surface level of that is social media, but beyond that surface level layer, have those figures thought about launching some type of vehicle that would make the education that they're providing more accessible to new audiences. I'm thinking of a couple of authors, for example. One is an MFT, and she recently launched a book, and then there's a different author who has a background, not specifically in mental health, but the content that he produces is directly related to relationships. And whether that's, relationship is a loose definition. It could be romantic, it could be professional, it could be family. And those types of individuals who are already passionate and creating incredible content, they likely, if they don't want to collaborate with you themselves, they likely have other people in their sphere who would love to partner up and talk through how to move these conversations forward. There's one other example, it might come back to me in a second, but oftentimes I think it's easy to think, or put someone on a pedestal and say, well, this person is famous, or this person probably gets 1 million DMs a day and isn't going to have the time to respond to me. But at the end of the day, we are, for now, still humans. And I think in more often than not, reaching out to those individuals cold even, it can have surprising effects, and I think it's worth doing that. If that feels uncomfortable or not accessible, as we've mentioned, I think already on the call, there are a fair number of private groups, and so reaching out to any of the three of us, but then also thinking in your local circles of like who do I know in my sphere who's a bit of a sort of pollinator or networker type person, and asking them the same question. And even if they don't have an immediate resource for you of a private group, they probably know someone who does. Yeah. So it's probably a lot closer than it seems.
That's such good advice. And I think oftentimes, there's introverts out there who are afraid, but when you have a passion and you are seeking that alignment and you come from a value add, how can I help? How can we get involved in the conversation? I think it opens so many doors. And like you said, Maggie, maybe it's not that immediate contact, but I see so much collaboration going on. So that's a great advice.
Well, and I would say you'd be amazed at, no matter how high profile or well-known someone is, if they're passionate about something, they have all the time in the world in the most amazingly generous and humble way. So again, whether it's a DM, an email, a cold, stalking online, through any of the social channels, but that's fantastic for people that you don't know or you admire from afar. Asking any of the financial advisors and or donor advised fund advisors are fantastic resources. Mm-hmm. And if anyone wants to contact me, I just saw Kate's. I sit on the board of an amazing mental health organization called Gateway. Just put that plug in there.
But I have to mention Gateway.
Yeah, Kate is the development director. She's got her information in the chat. Aside from that, but I also am really delighted to be working with a company that's in startup stage on a public benefit corporation that's mental health. There's so much going on across the spectrum in mental health that is super exciting.
So
making an impact one-on-one with individuals, but also from an advocacy and an institutional and a legislation of access and paid access for mental health across the world. So it's such a necessary and also important space. So I'm glad someone asked. But there's,
yeah.
you know, send me a LinkedIn if you'd like more details on some of the interesting things in mental health. And I love Sean Lesser recommendation, and Maggie, your company as well. So thank you for that question.
Well, and I love the full circle because at the New York, the very first summit for mental health, I was introduced to one of the program directors at Gateway. And, you just, when everyone has a shared passion and there's opportunities, whether they're even events like these or in people, that energy, it's contagious. And yeah, we work so much stronger together. So I am curious. So just so our audience knows, you guys touched on it, local restaurants and ag tech and mental health, but just so we really know your own interests in philanthropy and what really gets you excited and what you're passionate about, can you share that with us?
Go ahead.
Yeah, Bella, you want to start?
Sure. Always happy. I get most excited about sort of the human foundation. So whether that's education, human rights, family security and safety. I also know obviously the environment plays into that and a lot of other massive, sort of sector shifts. But it's when you can empower an individual through education specifically, it it has so many ripple effects on everything else we talk about that I think that's one of the most positive ways that I've been involved, whether it's on the charity side or on the philanthropic dollar side or on the impact investing side. It's always optimistic and empowering for me, and I love that.
It is. You gave me goosebumps because it just, has a ripple effect, but also a lasting effect. It affects the generations to come. And when you empower someone through education, it just changes the whole trajectory. So thank you. And Maggie, same question to you.
Yeah, for me, I'd say the through line is around what keeps an individual in great health, because at the end of the day, we impact everyone we encounter in our day. Food systems and regen ag are always going to be important for me because we eat 3 times a day. The food that we grow and that we choose to purchase, it's a direct relationship with the soil and with the land and with the communities. At the beginning of the call, we were talking about the Basque Country, Bella, in France. And I think of all the cultures in the world, it's still one of the few that really remains true to its roots, from cultural traditions to food systems to what's grown to the types of flavor profiles that you find. And as much as I am a food person and love having 15 different cuisines in San Francisco that I could choose from to eat, it's really special when you visit a part or based in a part of the world where you have this true heritage of traditions. And I think when you look at where is the impact that we're having with our dollars, whether it really makes a difference. And so keeping that front and center with again education, there's more on the sort of personal well-being side that I could touch on, but I would just keep it high level with the food systems and personal health, because they're interrelated and required to be a great community member wherever you're based.
I love that. Thank you both for sharing that. And now Bella and I we're determined we're going to come visit you in the back. But I can't believe that hour, it flew by. It always does. I cannot thank the two of you enough, Maggie and Bella, for your time, your thoughtful insights, but also to the amazing audience. Thank you all for showing up and coming with your passion, your questions. I mean, with this big $120 trillion on the move, it is, critical that we have these discussions and we learn resources and where we can really align, not only our money, but our strategy and our values. So a big thank you to everyone. And to both of you, we'll start with Maggie. Where is the best way for people to get a hold of you and learn more about your work?
Sure. They can reach out to me on LinkedIn, Maggie Spicer, or they can reach out to me on my personal website, maggiespicer.com.
Perfect. And Bella, for you?
Same thing. LinkedIn is best for me. It's Bella Berns, and Berns is with an E.
Amazing. Yes, I know. I learned that. I was like, why is the email not pulling up? But yes, before we depart, a quick reminder, today's Lunch and Learn was brought to you by Family Office Access. And if you are exploring how to connect with aligned family offices, you can register, get a free trial, and we do have an exclusive promo, Live 20. So you can save 20% as being amazing audience members. And I thank you all for your contributions today, and I hope everyone has an amazing rest of the day.
Thanks,
Thank
Danielle.
you.
Thanks,
Thanks.
everybody.